Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Tuesday the 18th of February. There's been another shift back into safe haven assets today. We've seen the signs that the coronavirus itself is starting to perhaps peak. The number of new cases are falling, the number of deaths on a daily basis being reported are also falling. However, the second phase of the issue that you get with the coronavirus will be economic. Once obviously the virus is taken under control, there's still the sort of ripple effects that you get through economic growth stats. And we saw a warning from the tech giant Apple overnight that suggested that it was going to miss its sales targets, and that has really sort of started to get analysts and traders thinking again that perhaps all is not that great economically with regard to the coronavirus. So subsequently we've seen a shift back out into safety. You've seen the gold price outperforming, you can see the yen outperforming. Overnight as well, you had minutes from the Reserve Bank of Australia that suggested that they were discussing rate cuts. So subsequently the Aussie is under pressure. Obviously Aussie and Kiwi are very tightly aligned to how the Chinese economy performs. The Chinese yuan has weakened, pulling dollar yuan back above 7. Again, we've seen the treasury yields falling as the bond markets have reopened following on from President's Day yesterday, sharply lower, about 4 to 5 basis points lower on the 10-year yield. 2-year yield not as badly lower, but certainly a yield curve flattener would suggest that the market is still pretty fearful of what's happening with this coronavirus. That is 3 months to the 10-year spread is again below 0. So subsequently we're looking out for just more of a risk-off trading session today. Equity markets, European based, are all under pressure. That is taking account of the fact that US futures are now 0.5% lower on the day. The oil price rally, which had been gathering momentum, has just rolled over again today, back around 1 to 1.5% on WTI and Brent Crude today. I've got Brent Crude as my chart of the day. I'll talk about that in a bit. But very interesting moves that we've seen as that oil price just starts to drag back again. So it takes me on to what we've got to look forward to today. Data-wise, we're fully packed European session. We have the UK unemployment data, which includes unemployment rate staying at 3.8%, but the average weekly earnings dropping back to 3%. Now let me show you that, which would be following this inflation decline. So that would suggest that if that were the case, then real wages remains around the same sort of level that they were last month. And then we're looking out for the German ZEW. Now this is interesting because the euro has been under pressure in recent days and weeks, and subsequently we're looking out for how the German ZEW comes out today. It's expected to drop back slightly from that multi-year high actually, but also actually let's get those expectations back up. It's expected to drop back to 21.5, and also on the current conditions, watch out for that to deteriorate back to minus 10.3. So that improving line of the current conditions expected to roll over. So the German ZEW could have an impact on the euro today. Now, also looking out into the afternoon, we've got the US New York Fed manufacturing data expected to improve to 5.0 from 4.8. So that is the little pink line here, which is this one, and expected to pick slightly higher. So pretty much in line with how it has been recently. So that takes me on to my chart today. Oh, before we get that, Neil Kashkari, the Uber dove on the FOMC committee, is speaking tonight at 7 o'clock. Now, my chart today, as I said, is Brent Crude oil. Now, Brent Crude had been improving and it had formed this nice breakout, actually a small base pattern on the move above 56.60. That breakout was a pretty key move actually, but interestingly enough, look at this, 57.50, that 23.6% fib of the big sell-off. 57.70 was yesterday's close, but look at 57.70 filling that gap from the 30th of January, that downside gap that we saw from the February sell-off, has now been filled. And the market is now, so it suggests it's a really significant sort of crossroads moment. Can the market hold on to this support around that neckline? Can the market sort of maintain the recovery momentum that it's built up in recent days? Look at these bull crosses and positive moves through momentum indicators. RSI back above 30, having been decisively below 30, was a positive signal, although turning back from under 50 is not great. But MACD line's bull cross, stochastics have been rising. So the reaction to today's move, and probably more importantly tomorrow, will be very important, because how the market responds, because obviously we've had this improvement, you can see that through the hourly chart, this improvement which has formed this base pattern. Is the market now going to be able to hold on to that base? Is it going to be able to hold on to this higher low at 54.95? This reaction low that we saw last Thursday is an important reaction low within the recovery. So can it hold on to these support levels that it's now starting to build up, is the question. Obviously holding the neckline would be positive, and maintaining that recovery momentum would be important as well. And then the bulls would be looking to close that gap at 57.70 and start to move higher again. But obviously the reaction lower today is sort of questioning this recovery that we've had over the past 5 days. But what I would take is this, as I said, this reaction low at 54.95. If that is breached to the downside, then obviously that recovery momentum is completely taken out, because at the moment the hourly chart is still holding above that 30 mark and is around neutral on the MACD lines on the hourly. So it's an important crossroads, I think, for this recovery in the oil price. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.